Okay, hello everybody. Thank you for joining. We're going to give just a minute or two for anyone else that's registered to jump on and join us, and then we will get underway with the presentation. Okay, welcome to the last fall Central Command webinar. I know temperature-wise, weather-wise, probably not feeling like fall anymore for where a majority of you guys are located, but this is the last of our fall webinars. This meeting is being recorded as we go through the topic for today, which is year-end processing. So we're going to have a presentation. We're going to do Q&A as usual, using the Q&A tab or the chat tab. But with the presentation today, we're not going to wait until the end. We're going to allow you guys to ask questions as we go forward. So just a few other housekeeping announcements. Everybody is in the meeting. Congratulations. And we're muted with cameras off, so no worries about awkward interruptions. You can just enjoy watching, listening, learning. This webinar is being recorded. You will get a link to the published recording when the event has finished and that recording has processed. And then I will also work on taking the recording and making a link available for any coworkers, colleagues, friends, neighbors, anyone that you maybe need to have a last minute present for. You can send them the link for this webinar and say Merry Christmas and Happy Holidays. Use the QA tab to ask any questions. So we have a question and answer tab section. You can also use the chat feature. Either work. I'll be watching those throughout the presentation, and as you ask questions, I will interrupt Danny politely, tap him on the shoulder virtually, and be able to ask those as we're going through the content. So we don't have to hold questions until the end for this presentation, and we will go right on through. Before we do get started, just a note, we haven't sent out the actual registrations and put them on the calendar yet with specific dates. We're going to be working on doing that here at the end of this month, but we do have our lineup of winter webinar topics. In January, we're going to cover what's new in 7.76. So Central Command came out with a new release last week or the week before, and so we're going to be covering what's in there in January. In February, we're going to talk about maintaining a healthy environment, so maybe dip our toes a little bit into spring cleaning of sorts and talking about what's needed technically to help your database run the best that it can. And then in March, we're going to talk about online data access, or better known as reporting. How can you be able to see the data that you have specifically in those web screens and get the most out of that? So we're excited to do those topics. Like I said, stay tuned with your emails. We'll make sure to get the registration pages for all three of those out so that you guys can plan to be a part of those as well. But without further ado, we're going to jump into today's topic, year-end processing. You'll notice that the presenter has changed for this month. We've got Danny Eldridge joining us, president of Servita, to cover this topic. So Danny, I'm going to pass it over to you.
Excellent. Thanks, Bailey. First off, just wanted to start and wish everybody a happy holiday, Merry Christmas. Starting off the year or the ending the year with this wonderful webinar on fiscal training, basically the year-end process, which is everybody's bane to existence. Let me just get my presentation set up. Bailey, you can see the presentation?
I can.
Perfect. Excellent. Okay. And just to remind everybody, this is being recorded. So, and as Bailey said, I prefer questions as we're going through the content. So don't hold off to the end, start piling the questions through, and we will address each question as we're going through the content. So fiscal year end is awesome, said no accountant ever. I'm just going to turn off my camera here because it's kind of distracting for me here. But we're going to cover the preparing for year end. So there's a number of different things that we are going to cover in regards to the process, what the process is. And so our agenda, let's just a second, it keeps moving here. Move that over. Our agenda for today is preparing for the year end. Why do we need the year end process within Unit 4? What does the year end process do? The impact of attributes, charts of accounts, and rules. Normally, when you do the year end process, there's usually a number of errors that occur. And we're going to kind of dissect how you can tell what the error is and why you're getting that error, and what to look at in order to resolve that error. And the impact of periods, company information, and system parameters. There's a little bit of impact that happens in regards to those periods, company information. We'll cover that as well, which can lead to some skewed results or some errors as well. We will then walk through the year-end process and the prerequisites. And then we'll finish up with some more questions and answers. And there's one little tidbit at the end that's a kind of a surprise that we'll talk about as well. So without further ado, let's just walk through the next step. So why do we need the year-end process? So the three biggest reasons why you need the year-end process is it keeps Unit 4 clean and efficient. So it does that by, if you don't do the year-end process, what a lot of companies have to do is they have to run their financials from when they started the company in 2005, for example, to 2025-12. So if you're in 2025 or 2024, every time you run the financials, you got to go all the way back to the beginning of time and run your financial statements that way. If you do the year-end process well and clean, then all you have to do is worry about what was the opening balance period for the current fiscal year, and then you basically roll it over and you go from 2025-00, for example, to 2025-12 or 2025-06, and it makes it nice and clean for running those reports. The second thing it does is it eliminates carryover from year-to-year changes. So accounts and posting attributes are no longer valid. You can clean those out as you roll over the year-end process, doing some adjusting entries to clean those out, and we'll talk about the impact of that on the balance sheet in a little bit here. But it makes it nice and clean. It makes everything current in the current year, and you're not left with things from 2005 or 2006 or 2017 that are no longer valid for reporting purposes and no longer required for analysis within your organization. The last one is rolls up previous year balances or values. So that makes it much more quicker and efficiently to run your reports. You don't have to go through thousands of lines of data. It rolls it up into the 00 period based on consolidation or aggregated values. And therefore, when the system runs, it's much more quick and efficient in getting the data back out to you. And lastly, because it's a good practice, it's one of the foundations of Unit 4 from a product standpoint, and it's a good practice. It'll keep your system running nice and smoothly and keep things efficient. So basically, what does it do then? The first thing it does is there's two steps that kind of happen in the core process. The first thing, it takes your assets, liabilities, owner equities, your balance sheet items from a transactional level and rolls it over to the 00 balance period. So in this case, my example is 25-00, so that's coming up. You'll take everything from 2024 if you did your year-end property last year, and it'll roll it over from all the periods, so all the transactions in 01, 02, 03, so on to 012, and it rolls it over to the 2025 period. So I know some companies use a 2024-13 period, and that's for balance, for adjustment entries, year-end audit entries that occur. But again, it's not required. Some other people use the 12 period, and they'll do a transaction type to signify, oh, this is an adjusting entry. Both are good practices. and you can use both. But if you use a 13 period, there's a caveat that you need to be aware of, which we'll talk about when we talk about the impact of company information and periods in a minute here. So from that standpoint, basically what the process does, it takes all the transactional data for that year, and it rolls it over into the 00 period and aggregates it. So let me show you an example of what that looks like. So here's an account that is 2022-01 to 22-04 as an example. It has a balance at the bottom of 1780.12. And if you'll notice, it's by branch and by customer. Now, it's critical that you understand the impact, and we're going to talk about it today, the impact of the account and the posting attributes that are on all the accounts when you roll them over, because that's a big cause of two things. Number one, the volume of transactions that get transferred over during the year end. And number two, when you close attributes, it has a big impact on the running of the process and creating errors. So what it does is basically the process takes all the transactional data for the periods outlined, and it creates one entry in the 005, in the 00 period. So all of these transactions here would be rolled up based on account, branch, and program, and the total amount is posted to the 00 period. Now, if you have other posting attributes, again, this is a simple set, example set, but if you have other posting attributes in the other categories, it's going to roll it up based on all of those values and roll it over for that account. So just want to see if there's any questions on that before I move forward, because again, this is understanding this and what's happening here of how it aggregates the data based on the posting attributes and then post it as one line in the 00 period. Again, what it happens is when you start reporting on 2025, it's not thousands of transactions from previous periods. It's just one transaction it's got to pull from. So there's a big advantage to having the process work like this. All right. Okay. No questions. All right.
I'm not seeing any questions yet. I guess one thing that can come to mind, at least from my brain, is where would someone go if they're wanting to check what those posting attributes are currently on an account? Where would they find that information in Unit 4?
Great question. That is that can be found in the menu. Let me just move something over here. Here we go. That's going to be found in your chart of accounts and account rules is where that's going to be found. Okay, so that's where if you go into your chart of accounts, you'll see each account has a rule attached to it, and the different rules are going to have the different posting attributes to it. So in this case, this is just account and branch. But if I bring up another account, let's say customer groups accounts, you might have travel customer, group ID, and activity. And again, if these are assigned to the balance sheet account, so normally your ones, depending on, I know in Europe, they kind of sometimes flip them. Your balance sheet accounts are your 7,000 series or 6,000 series, 8,000 series, and your P&Ls are the ones. And in North America, it's more ones, fours, ones, threes, ones, twos, threes are usually balance sheet, and the fours are usually profit and loss. But if you're looking at a balance sheet account, that's where this becomes very important. If you have different posting attributes for each account, because the system's going to post and roll over that amount based on those rules. So we'll come back to that in just a minute and talk about the impact of that it has on the system. Okay? All right. Perfect. Let me just move this out of the way for a minute here. All right. Now let's talk about the P&L and how the P&L works. So the P&L, basically, it does the same thing, but it takes the transactional data across all the accounts. So 4, 5, 6, 8, and 9, 9 is a clearing account, and it aggregates the amounts for all accounts, and it posts it to the retained earnings. So let me give you an example of what that looks like. So the first thing that it does is it takes your P&L accounts, and again, there's a subset of accounts with the branch on it, okay? And so it takes those totals across all the periods, and it basically breaks it down by each posting rule again. So in this case, just simplified, 4,100 has 202 as a value. 405 has 202 as a value. 410 has 100 and 202 as a value. So it looks at the retained earnings account and looks at the account rule for that. So in this case, the retained earnings account has the account and branch attached to it. So what it's going to do is it's going to take everything from the P&L by account and branch, and it's going to post it to the retained earnings account based on those two values. Now, if you had, for example, travel customer in the retained earnings, then the system's going to take everything from the P&L based on account, branch, and the customer, and it'll post it to the retained earnings based on that level. Okay? Or if you may have legal entity as a posting attribute in category 6 or category 7, again, the retained earnings will post it based on that account rule. So the account rule becomes critical for the retained earnings account, because when this process runs, it automatically looks and says, okay, you want to post this to retained earnings? What are the attribute? What's the account rule? What posting attributes do I have? And I'm going to aggregate the P&L by the 3,500 account and those posting attributes. So what that looks like is something like this. So it takes all of those items, it rolls them all together based on ignoring the account and branch, and rolls it all up to the 3,500, and we'll post it by 100 and 202 and give you that posting within the system. Okay, so at that point, basically you're looking at a posting to your retained earnings from the P&L posted to each of the attribute values that account has. Okay, so any questions? No questions?
Not yet.
Perfect. We're either explaining it well or we've lost everybody. All right. So the goal is, okay, what's your suggestion for posting attributes being closed during the year? I have suggested that they set the period to the opening period of the new year. See more. Great question, Tracy. There's two ways that I would approach that. So one of the things is, especially with the P&L, so let's talk about the balance or the balance sheet and the issues that come up with that. Okay, so let's say you have an account that's let me pull something over here for a second. One of the things that you want on the balance sheet is you want to use attributes that you can balance at the end of the year. Okay, so let me give you an example. I'm going to give an example of the ARC clearing account. Okay, so it's usually ARC BSP payable account. Okay, usually it's a GL account, and it has the ARC BSP account, and it's an ARC BSP. So let's look at the rule on this. Okay, so tab through. All right, so in this rule, it has the account, branch, TRV cust, IATA location, and agent. Okay, so when anything posts to this account within the system, all right, so it's account 2188. So let me go into here. Then I'm just going to add that into here, add the field, and go to account, and go to 2108, I think is what it was. So let me just verify that. 2108, perfect. And I'm going to pull this up. All right, we got lots of rows in here. I'll narrow it down to a period here. And I want to add something else in here. So add field, and I'm going to add all the other categories, say okay. And I'm going to just change some things here. This here, these fields, and aggregate. Okay. Here, And let's just clean this up a bit more here. I'm going to just we don't do a count. We'll do 1, 2, 3, 4, 6, 7. And I'm going to aggregate it by period. Do this 1, 2, 3, 4, 5, 6, 7, 8. Okay, let's run that. Okay, let's get through that. Okay, so what we want to show you here is in this posting, there is a posting to 2108, branch 100. The category is the IATA number, and then the agent is 2H. Okay, so what happens in this data set here, then we have 01, and we have 2H again, all right? So you have everything with 2H. So let me just filter on 2H for a second. So in this period, we have a balance of 883.07 with these values in it. Again, the key is looking at the attribute values. Now, what happens in the year-end process is it's going to roll it over. So it's going to roll it over, if you remember on the balance sheet when we showed earlier, it's going to roll it over by the account, by the branch, and by the category, and by the agent, if it's 2H, okay? It's going to roll this amount, 883, over to the opening balance period 000. Now, what happens over time, okay, if you can't balance this to 0 or clear it out. So let me give you an example. Usually what happens in the ARC on the ARC account is you post a payment that you received from ARC to clear off your ARC account. And normally what happens in that process is you post it to the 2108, you post it to the branch, and you'll post it to category 3, okay? And you'll put in here, in this example, you'll put a payment of 883.07 in. Now, that's great, okay? Because based on those 3 attributes, guess what happens? It balances to 0, okay? So the year-end process, if agent wasn't part of the rollover or the account, when it rolls it over, it's not going to give you a balance for 2H in the next period. But if you don't clear it by 2H, what ends up happening is it's going to roll it over based on that balance of 2H. Does that make sense? I hope that's making sense. So what happens in 2500 is you're going to have a balance based on this posting attribute. And if you look at it on the category 3 level, yep, a branch and account, it's going to be 0. But it's still going to post it in the new period, in the 00 period, with the 2H in there. Okay? So you need to be aware of that because that grows year over year over year as you're rolling it through. Now, going back to Tracy's question, if you close 2H, all right, and clear that out, and I've seen some agencies use ticket number on this, which obviously creates some errors on our items on that. Okay, so obviously if you're posting it by ticket number, that rolls it over year by year. So if you have 1 million tickets, then when you roll your year end over, you're going to have 1 million transactions in your 00 period. All right, so this is very important just to be aware of when you're setting up your balance sheet accounts. Whatever attributes you put in there, that's how it's going to roll over unless you're setting the balance to 0. So if you did a posting to the general ledger to, at the end of the year to adjust and remove the 2H amounts, then that would clear it out as well. So just be aware of this in regards to why is my year end, rolling over and I got thousands of transactions. It's usually because 2 or 3 accounts have something that you're not balancing to 0 in across all the posting attributes. Okay, now there are some ways that you can get around that. We'll talk about that in the prerequisites for setting up the triggers. Okay, so there's some ways that you can get around it so you don't pull that over. Now, the caveat to that, and we'll get into that later, but let's say 2H closes, during the year, or you close an IATA number. Okay, that's probably a better one. There's a couple ways of doing it. Again, Tracy's suggestion is set the period to the opening balance 00, and let it roll over, okay? That works. The problem happens next year. All you're doing is you're kicking the can down the road if you do that. Because when you run 2026-00, it's going to roll over and it's going to say, hey, that opening balance was here. There's still a balance to it. Close it, roll it over to the next year. Now, the other option to do is if you start to close those attributes, you could do an adjusting entry to zero it out either in the 13 period, or you could do it in the 00 period and clean them out so that you've closed the item, move it to an item that, or an attribute value that is a valid attribute value. So that would then turn around and set the balance to that 0 in the 00 period. So when you run it the following year, it's going to say, okay, what's the aggregated value? It's 0, no problem. We're going to clear it out and it's going to be 0. So that's one of the ways to look at that from that perspective. Okay, so again, be aware of what your GL or your P&L, your balance sheet accounts are and what the values are in those. And when you see the year-end process, and we'll talk about that in a little bit here. Okay, so that kind of led into our next slide here. Let me just poke it over here. Okay, is attributes. Okay, we just talked about closing and parking attribute values. All right, the same thing goes if you delete an attribute value. If you're making a deletion of an attribute value, that value is not going to exist in the descriptions. So you will actually see blank values. You'll see the value in the GL, but the value will be blank. You won't have any descriptions to them when you roll those over. The other thing that you need to be aware of if you move a posting attribute or add a posting attribute to the system, okay, which then has an impact on the chart of accounts and has a further impact on the account rules. So let's move over to chart of accounts. So if you close charts of accounts, you need to be aware of the posting attributes that go along with them. So for example, if I'm closing this chart of account, let's say WIP speakers, and I close that, what you want to be aware of is when you roll that over, if there's a balance in there, it's going to want to post it. Now, you'll see an error on the report, the posting report, because of the fact that that item, that account is closed, but it has a value to it. So it wants to roll the value over with all the posting attribute number values to it, but the account's closed, okay? So make sure that if you're going to close account, that the balance of that account needs to be 0, so that keeps the errors from happening moving forward, okay? And again, you can do a simple post back with this, run it, pull all the values that are in that account, and then repost those back into the Unit 4 system using a post back to do an adjusting entry. Again, some people do it in the 12 period using a transaction type, or they do it in a 13 period, or you could do it in the 00 period, and you can, again, show the audit control of, we close this account, we rolled it over, and again, that comes into play. The second thing you need to be aware of is if you change an account rule. So if we make a change to an account rule, for example, the ARC BSP account, and we add the booking agent onto this, for that example, okay? All right, and I make it fixed or mandatory, all right? And I save that. So once I save that, I've created a new rule for this attribute, for this account. One of the things you want to do in the chart of accounts is you want to use, if I go back up here, let me just go back here and isolate the account. You want to use your periods to do this. So what you're going to do is you're going to take the 2021-8 and you're going to enter it again, okay? This is fine. You can enter a new account using the same number and everything. But what you want to do is you want to set these accounts to a period range. So in this case, 2024-12 and 2024. And it's, the other recommendation is you actually, just a second, I'm trying to find my mouse here. There it is, okay. Chart of accounts. You want to give this another name. So you could do version 2 and save it. I don't want to overwrite this. So now I got another account rule. All right. And I can come in here and you can type it in, or you can look it up, F9, F7. And there it is there. Perfect. And I would give this my new period range that applies to. That'll let me save it. Okay. You won't get that duplicate key error. You won't be able to do that. And again, you can either park or close the previous one. All right. Now everything will abide by that new account rule moving forward. All right. Now, again, it's recommended when you do that type of thing, you know, because your values don't have anything as a default. If you set it to mandatory, put a default in. So that way, when you turn around and do the year-end process, it will use that and post it to that default level. All right. So any blank values as it rolls it over will use the default. Otherwise, it's going to use a value that's in there. In this case, it's a new posting attribute, so it's going to use the default. Okay. All right. Again, be aware of the changes that you're making to your account rules, your chart of accounts, because what happens in that process is when you run your year-end report, you create your errors. So when you run the year-end, and again, this is a good example of a year-end balance sheet rollover, okay? So when you're looking at this report, let's just walk through why you got that error. So for example, if you'll notice here, the original account is 1450. It's being posted to the 999 account, okay? Because that's your error account that's set up in your company information. Excuse me, and it's saying that category 3 is required for 1450. All right, in this case, there's no values because there's no value here. So this is telling me that there's been an account change or account rule change to 1450. The data that's trying to be posted to the 1450 account is showing that there's blank values, but this account rule requires a value. So again, we got to figure out, resolve the issue, and we'll talk about how we resolve it. Again, in this case, it's the account rule. So you can either set the value to optional on the account rule. That's one way of doing it. So when it passes it through, it's going to say it's optional, it's not mandatory, therefore it can roll over, okay? Or it's a required element, and you need to go in and look at the transactions that are blank and clean those up, okay? The next one is on the category 7. Okay, in this example, we're showing a value and it's showing the asterisk underneath, show it's an error. So why is that error occurring? Okay, number one, it's probably closed. All right, so therefore, this value is closed, or it's no longer a valid attribute value for category 7 for the account 2012. So therefore, either A, we got to go into the attribute values and reopen it so we can roll it over, or again, if it's really closed and you don't want it, make a journal entry that adjusts this transaction so it makes the SCCH value as a 0 balance on that account. Then you can turn around and post whatever valid value you want as a debit or credit based on what you're trying to do. In this case, it would be a debit because the amounts are credits and you're trying to clear them. So you do the debits and a credit to a valid value and zero out the SCCH attribute value. When you do that, when the year-end process runs, it'll recognize, hey, the SCCH, even though it's a valid value for previous transactions, it's 0 for the year-end rollover, and it clears it out, okay? Yes, it's creating a lot of work for you when you're closing and opening attribute values, but then it makes everything cleaner later on, and it makes it so that anything that's historical is clean and cleared up historically before you roll over to a new year, okay? So that is the kind of the way you can look at common errors that you see in regards to the process and the impacts of the attribute values, the chart of accounts, and the rules, okay? Any questions on that before we move forward? We doing good? Perfect, okay.
Still doing good.
Awesome. Okay. Perfect. Let's come back over here. Okay, let's talk about the next things is the periods, number of periods, company information, and some system parameters that impact the year-end process. So the first thing that we've talked about and we kind of alluded to is the period, the periods that are a part of the process. So let me go into, it's amazing that when you go into the year-end process under General Ledger, the menu items are already there that kind of are critical to the year-end process. So those are, I've lost my just in here. Go into here. Interesting. I've lost my values here. That's strange. Okay. Why is that happening? Sorry, General Ledger year-end routines. Okay, here we go. So posting maintenance, period maintenance is a very top one. All right, so your period maintenance, normally when you create your period maintenance, you can generate this at the beginning of the year very easily. So I'm going to show you a little trick that I don't think everybody's aware of, especially older people, older companies that have been on the system for a while. So if I want to do my periods for 2024 and they don't exist, okay, in this case. So I can go to generate periods. So this is an easy tool that allows you to generate all your periods so you don't have to type them in anymore, okay? And in this case, I want the period month 1. I want my starting period to be 01. My date to generate the periods is from my January 1st date to 12/31, so that automatic defaults in. And then down here, I can say, what do I want, okay? So for example, I want to know the month, and I want the year for this. This is the way I want to do my periods. So I put a space in just to make sure you see that. I put a space in and then I type the period. And then I just hit F11 and that keeps. And voila, it populates the periods, okay? The next step in this is I want to add my opening balance period. Okay, so 2024-00, 01-01, 2024 to 01-01-2024. You don't have to enter slashes. And I will type in OB 2024. Okay, and then I'm going to save this, F12. All right, so now that gives me my periods in there. Now, if I want to regenerate those, okay, I want something different at the beginning of this. From a description standpoint, I want to change that. Guess what? Just click regenerate periods again. I can come up here, leave everything the same. I'm going to select month, and I could do, for example, I could do period number, and I could do space, or actually what I could do is I could do this. I could do a dash, okay, and period number, and I could put my year in here. Or let me do this. I'll do year, space, 2024, and then I'll do period number, okay? So that'll give me my period number. So again, F11, which is your keep, and now I have, you know, period number and the year next to it, or I could do a dash or whatever I want to do for that. Again, I need to re-enter my opening balance period. So 2024-00. Oh, just a second, it already exists. So let me save this first, F12, F7, tab through F7. Okay, it's already there. It kept the 00 period and it overwrit all of the other periods from that perspective. Okay, so the reason why I want to point out this is number one, your opening balance period obviously needs to be set up in order to roll over the year into the next year. So again, if you're rolling over to 2025, make sure all your periods are there. They should be there anyway. Some people will do 3 or 4 years out. Just make sure that when 3 or 4 years out comes, usually in I would say September, when you're running your period, like your age debt or some of the statements in Unit 4, it does look for your previous periods, so it can do some calculations. So those need to exist in the system, and people will, oh shoot, why is this having a problem? They'll contact Unit 4 support and they'll say, hey, this report's not running. They'll say, hey, you need to set up the periods for future periods for that to run. So just be aware of that. If you get that error, hey, you just got to set up the periods. Something tidbit put in your back of your filing cabinet in your mind, so that everything continues forward. Now, the second thing I want to talk about in this is some people, like I said earlier, will add one or two. They'll do a 2024-13, for example. Okay. Now, what happens on a 2024-13? Let me just get out of here for a second. F7. Okay. It's not letting me add that period. And the reason why is you got to go to company information then. All right. So in company information, and again, they put it in the menu right down here. Okay. Company information. When you tab out of there and you do your setup, okay, the number of periods comes into play. All right. So in this case, what you should have in here is you should have 12 periods. And let me save that, F12. All right. Now I'm going to close down this period maintenance screen. Close this down, and I'm going to reopen it because I made a change that impacts that screen. Okay. 2024-00 and F7. Now I can insert a row. 2024-13. Now, second here. 12. 1, 2, 3, 4, 12. That's why. Okay, just saying. I'm going to come back into here, go back to company information. I'm going to increase this setup to 13 periods. The 00 period doesn't count. And I come back to period maintenance. 2024-00-24, F7. Okay. Insert a line. 2024-13. I'm still getting the value. Okay. All right. Imagine, if you will, a case scenario. What you want to do is you want to add, let me do this for 2025. Let's redo this for 2025. F7. Nothing in there. Generate periods. Okay, months. Generate there. Text 1, I want the month. Space 2025. And tab and keep. All right, now I'm going to insert a row. 2025-13. Okay, there's something that's keeping me from entering a 13 period. So you can enter a 2025-13 period. Not sure why it's not showing up here. The reason, and when you do, it has to be the last day of the year. So it has to be 12/31/2025. You can't do it so it overlaps the whole month of December. So at that point, you can then load a 2025-13, 2025-14. Now, the reason why that's important is when the year-end process runs, and we'll talk about parameters in a minute, it's going to look at the number of periods from here, from this field here, to determine the number of periods in the base year. Okay? But the 00 period does not count. So if you have 00, so let me go back to 2024 here for a second and bring it up. This period doesn't count. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is 12 periods that are going to make up the base year. Now, if you have this value set to 12, but you have 13 periods, when the year-end process runs, it's not going to pick up the data from the 13th period. So when it goes to post, you're not going to have all your transactions. So again, another caveat to be aware of that impacts the company, the period end routine. Okay. The next parameter that I want to talk about right now is there's a parameter called exclude GLTC, okay? Now, all of you probably use your single suspense account reconciliation, right? You have account reconciliations that you're using that are single account and they're set up in the system. So one of them might be your ARC report, your ARC account, right? So those are all set up. So let me just insert a row here, 2108. All right. Am I in SH? Yeah, I'm in SH. Let me go back to ST here because I know it's set up in here. So we'll go to ST and go to a second here. Okay, general ledger, single account, suspense reconciliation, account reconciliation. Here we go. Perfect. All right. There's none set up. All right. All right. Let me set up the 2108 and F12. Okay. And make sure it's there. Oops. Make sure it's there. It's there. Good. So let's go into the single account reconciliation. So you roll over your transactions at the end of the year, and you come into here and you hit F7. I'm just going to put a period of 2020, 2022-01. Keep it short. Okay. You come into here and it rolls over, and you'll see all these transactions in here. One of the things you'll notice is under transaction type, you'll see YE transactions. And you're like, what do I need to do to get rid of these, right? Because they don't balance the zero in this account reconciliation. All right, so this XE exclude transaction. So if you go into your system setup, go down to system setup, go to system parameters, okay, go to system parameters, and go to your GL underscore exclude, all right, and I'm just going to do an asterisk there, and underscore TC, all right. Now, this we have a document that we can share with you, so just a second, let me grab it here. We have a document that we can share with you, and doing this again, so just give it a second, that walks through how you set this up. So if you put a YE in here, a Y asterisk, just like that, and you turn it on, all of those transactions, and you save it, when you go into the single account reconciliation screen, all of those transactions that are YE will be removed, okay? So you don't have to worry about them again. They'll all be excluded, and I'll just walk you through this. And again, we can share this document, just send Bailey an email and we can get it out to you. So it's going to turn around based on the transaction type, exclude all the YE transactions from the rollover. And basically what happens there is they all go away. So here, up here, you'll see them. They're YB transactions in my single account reconciliation. Once you turn that parameter on, away they go. They go away and they don't exist in that table anymore. You don't have to worry about reconciling or working around them. So it's another, again, another impact of the year-end process that you want to work around. Okay? Any questions? Perfect.
We're still doing great.
All right, excellent, excellent. All right, next thing on the running the year-end process, prerequisites. So let's take a step and we're going to walk into how the process works. So let me just move this over. All right, advance our slides. All right, so the opening balance transfer is the most common and it uses triggers. You need to run this once for the balance sheet and a second time for P&L. There is a simple, we're not going to cover it today, but there is a simple year-end rollover where you do some filters between accounts and you run that. I think one agency is probably using that functionality, but it doesn't handle you have to dictate to it what attributes or what categories you need to run. And so we don't recommend that. We always recommend the more flexible one, which is the opening balance transfer. Okay. So the prerequisite for running the year-end balance is to create the YE triggers, okay? There's one for balance sheet transfer and there's one for the P&L, all right? As we walked through earlier in one of our first slides, we walked through what happens. That's why you need the 2 triggers, because one does the balance sheet rollover and the other one does the P&L. All right. The other prerequisite is a year-end balance table is configured and set up within the system. And we'll talk about the 2 different sources. There's actually 3 sources. One doesn't exist because it's cash accounting, but the other 3 out of the 2, you're either using the year-end balance table or you're using the GL table. Then you run the opening balance transfer process, and we're going to walk through this in a little more detail. You run the opening balance transfer, you run it once for the balance sheet, once for the P&L, and you can run it with no posting, so you can see what the effect is. It'll show you any errors, and then you can start working those errors to run that. Okay. So the process itself. So let's walk through the prerequisites first. So the first thing you need to do is you need to set up your triggers. So depending on your configuration, some people do it if they have a multi-company environment. They'll do it by each company. Okay, they'll create the triggers for each company. All right, you don't have to do that. You can do it the same triggers for all companies. All right, so we're going to start with the YEBL. Okay, we're going to start with that one first. Space. YE opening balance. So we'll start with this one first. Okay, so underneath your menu, there is a trigger setup within the system. Common under, it's under the year-end process here. Let me just go back here, and we'll come back to this in a minute. Okay, year-end routines, opening balance transfer, trigger setup. So that opens up the trigger setup screen. And when it does, it's going to gray out the trigger type. So the trigger type is always going to be YE. All right. YE, then you give it, when you create a new one, you give it a new name, and it's YEOB in this case for me. Again, if you have multiple clients and you want to do it by client, you can do it by each client. So this is by client J, this is by client P, B, and the difference between these is you'll see it's closed, but it's by a specific client, PT in this matter. Again, if your accounts are different, then you can use a different client. You know, you want to keep it simple. So basically, if you can keep it simple and use the same trigger across all clients, then that's going to, make it easier for you. In that case, if you're using it for all clients or you just have one, you want an asterisk in the client, so that it's the same across, going to use the same trigger across all of those. Now, if you're not familiar with triggers, I'll give you a quick kind of run over of what they do. All right. So there's a number of different triggers within the system. There's year-end, periodic, transactional, batch input triggers. Basically, what it does is it looks at the source. On all of them have the same kind of behavior. The difference is the year-end trigger is a kind of a one-sided trigger, and I'll explain to you why that in just a second. But all the triggers have a source and they have a destination, and there's a couple of ways you can set up destination. We can cover that maybe in a later session. But the source is, where do I get the data from? Where am I aggregating the data from? So in this case, the source is every account with a wildcard, every account that begins with a 1-star. Every account that begins with a 2-star, every account that begins with a 3-star, okay? And then, doesn't matter on the branch, customer, Cat 3, Cat 4, agent, or Cat 5, Cat 6, or Cat 7, all right? So basically what this trigger is set up to do is say, okay, give me everything in account 1s, 2, and 3s with all the posting attributes, okay? And then down below is our destination. Now, on the year-end trigger, there is a setting on an account, which we call a clearing account or a balancing account, that's going to be used, and it's going to post the balancing value, the debit or credit, to whatever the original is in this case. So there's only one line required in the destination, because when you run the process, you stipulate what the other account is going to be to post the balancing value to in order for that to balance out. So in this case, we've set the destination up as use the original values. So every instance of 1 star, that branch, that customer, Cat 3, Cat 4, agent, Cat 6, and Cat 7, again, going back to the posting rule, very critical, understand your posting rules, is going to post to that same account, but it's going to do it in the 0-0 period instead of the period that this is being run for. So again, the parameters in the year-end process look after all of that for you. You don't have to worry about that. But you just need to be aware that this is what this is doing. Now, earlier I said, hey, if I got a value that I wanted to clear out or I want to get rid of in that process, and I don't want to post to it. So go back to our analysis of the ARC account, and we added in the IATA number, or we added in the agent, or we added in the ticket number. Okay. Now, what you can do down below here is you can actually say, okay, move this from original and put in manual. Okay, and that starts to let me put stuff in here. So I can actually do 2108, okay? So I'm overriding everything else just for this one account, okay? And I can then turn around and put in here the values that I want to overwrite by just clicking off that, all right? So in that case, it's going to turn around and it's going to manually override the 2108 account, all right? So everything will be original except for the 2108 account. Again, you can put in here 100 in here, and that's the percentage that it's going to do. And the other side of it's going to be handled by the system. And you can override that value that you want to override. When it does the rollover, it's going to look after it for you. So just be aware of that from that perspective, okay? That's one option that you can do to clear out some of those accounts, all right? Now, what you want to do, so that's one option. Again, use this as a grain of salt, be very careful with this, but again, it's an option. What I prefer is you turn around and set the values to optional, let them roll it over, and you can clear out the amounts on the other side, okay? That way the journal entry is clean and it doesn't get lost in that year-end transfer, but it's an option. Okay, so that's what the 1 year-end trigger is. Again, then we look at the P&L trigger. And again, it's just constructed a little differently, okay? So in this case, say yes. In this case, I'm taking everything from 4-star, 5-star, 6-star, 7-star, 8-star, 9-star. I'm going to take all of the values for this, all aggregated by the posting attributes, for the 3,500 account. And I'm going to manually say, go to 3,500. So it's going to take all of these and post them to the 3,500 account. So if we go back to our one of our original slides, you can see that that's going to repost it. In this case, the 3,500 account's the retained earnings account. It's going to post it to the retained earnings account. Okay, so that's the first thing that needs to be set up as a prerequisite is the triggers. Okay, the second thing that needs to be set up and you need to be aware of is the source of the data.
Okay. We do have one question.
Okay.
Will the APAR ID be picked up on subledger accounts automatically, or is there a parameter that has to be turned on for that?
No, they're going to be picked up automatically. Awesome. Great question. Okay. All right. So the year-end balance table. So there's two ways of doing when you run the year-end process. So let me just transfer. Open up the year-end process, and I'm going to cover this in just a second. But there's two parameters you need to be aware of in the year-end process, and that is the data source. Okay, right here, data source. Your values are on the data source are year-end balance table, general ledger are your two main values. There's a periodic table you can use, but a lot of people aren't familiar with periodic balance tables. So again, I suggest you don't use it. The advantage of the year-end balance table is it's a special table within the unit for application. It's set up under the balance table setup. You don't actually get to see it in any of the balance table queries. So I'm going to show you how you kind of add it to your query in just a second here. But the year-end balance table is a transactional, or it might be aggregated depending on your configuration. In some cases, we aggregate it. And what it does is it has special code, and you'll notice here it doesn't show all the attributes that are a part of this, because this table is created based on all the different DIMs and all the different values across all the account rules. So one account rule might be using, let's say, category 4 for booking agent, and then category 4 later on in a different account for carrier code. This table will store both of those values, okay? And it stores the attribute ID for those different accounts and those values as well. So that's why you see the attribute IDs in here, as well as the DIM values, And again, I'm not going to dissect this, but this table is built specially to aggregate data and summarize it based on all the transactions in the previous year, okay? Now, one of the things about this balance table is it's going to, in the definition here, you're going to see that it's creatable, so I can update it and run the balance table update on it, but it's also updated by the AGDWS service. So this is a service that runs automatically, configured in your management console, that automatically updates balance tables. So this table, once it's set up and running in your environment, will automatically update. You don't have to rerun it every year or clean it out or do anything on it. It's going to run in the background and get updated automatically. Again, what it does ahead of the year-end process is it's aggregating those transactions based on the posting attribute values. So if it turns around, it runs just like any other balance table in that case. All right. So one of the things I suggest is you do an analysis of that balance table. Okay. So the first thing is, like I said earlier, it's usually not added to the menu. All right. You don't ever see it, and you can't go into balance table inquiry. And I always like browser, and I can't come in here. You will not see year-end balance table on this list. All right. It's just the way it's hidden with the system. It's a hard-coded thing within the Unit 4 system. However, what I normally do is, or suggest, is you come in here and you go into General Ledger, and I like to do it under GL, under Inquiries, and I right-click and I say New Menu. All right. So in the new menu, I give it a name. So I'm going to give it the year-end balance table. Okay. All right. I click Advanced. I say Browse Table. All right. And I put AGL year-end. Now, it's not year-end. Okay. It's based on the balance table definition. So I'll show you that here in just a second. And then you need to make sure you give somebody rights to it, or you have to add those rights through the menu capability within the system. So full access, super, let me scroll down here, super, and give system and say okay. All right, now it's going to refresh your menu automatically. And underneath here, you're going to see two of them now because I did one earlier. So year-end balance table. So now when you open this up, there's your year-end balance table. And normally what I do is I'll get rid of things like, okay, I don't need to see the attribute IDs. Let's get rid of those and delete that field. Okay, I want the API ID, I want the API type, I want all the DIM values. So I'll build this table, and I might build it just with a count and amount and period for that matter, all right? But I'll build this as a query, and I'll save it as a query and save it as a template. The reason I do that is because then I can go in my GL transactions and I can build a browser as well based on the same data that's in my balance table, and I can just run the two of them very quickly, and I can look at both of them and say, yep, all my accounts balances, my year-end balance table is checked. Again, it's just a safety check to make sure those two balance, okay? The reason why you want to use the year-end balance table is because it gets aggregated. So if you run the year-end process and it has to go through all the GL transactions and aggregate them and then trigger them, put them through the trigger process, it's going to take a lot more time to run than what it is if it's already aggregated based on each period, based on the posting attributes in one balance table, all right? So it's going to cause your year-end process to run much more quickly and efficiently. All right, so let's walk through the parameters of the process now. Okay, so when you run the process, it's an AG05 year-end opening balance transfer. Okay, the opening balance period. So the first thing you put in the opening balance period, the first parameter is the opening balance for the next fiscal period. So I'm transferring everything to 2025-00. So basically, you're going to put 2025-00 in there. Again, make sure it's open, make sure it's either open or parked, and that'll not be a problem. Earlier, I talked about the difference account and the reason why in a trigger, you don't have to put a debit side and a credit side in, okay? Because in this account is where it's going to post the balancing entry to the rollover. So it's going to roll everything over and then turn around and post to a 999 account in this case. And that'll be a clearing account. When you run the P&L, it's going to post that account. When you run the balance sheet, it's going to post the account. If everything's in balance, whatever your balance sheet is out of balance, I say out of balance, but the balancing amount on your balance sheet should enter your P&L amount. So those two should equal, and it's going to post to the 999 account. The post on or off basically allows you to run it as a trial. Hey, I'm going to run it once, see if there's any errors. If I have to fix anything, I could fix them in period 12 or 13 and clean those up and make sure everything balances, everything's clean. So again, it's a good practice of running it as a trial. Again, it also will give you an indication of how long it's going to run and take the post. In some cases, it can take a while. Again, if you clean up your year-end balance table and make sure it's nice and clean, that can eliminate and reduce the amount of time. The next one is the accounting analysis check. Okay, and that process is basically, it's checking all the account rules. Now, if you could turn that off and it's not going to validate the account rules. It's going to roll everything over. If there's any errors, it's just going to roll them over. Again, not a good practice because I like a nice clean GL account, and I want to make sure whatever in there is valid and is in good shape. It's not closed, and I'm not rolling everything over from year to year, and I've got a lot of garbage in there. Okay, the transaction type is basically it's whether you're running the balance sheet or the P&L process. So it's based on the transaction types that are set up within the system tied to those triggers. And I'll go back to that because I think I skipped that in just a second. All right. The number of errors, again, you can turn it on and say, hey, I'll take 10 errors, or I'll take 15 errors, or I'll take 100 errors. And that basically allows you to put a number of errors. Again, I like things clean. I recommend you always do it as 0, and your GL is always going to be clean moving forward. The next one is the data table source. So again, Y is year-end balance table, G is your GL table. And again, if you do the GL year-end balance table, it's already aggregated all your data nice and neat. It's going to run faster and more efficient. Just double check. I walked you through how to add that table, balance table inquiry, set it up, save it as a template, and you can merge the two, or look at the two side by side. The next one is your base year. And again, the key here you need to be aware of, and I'm going to go back to it because I touched on it earlier. The base year is 2024. When this process runs, it goes and looks at company information and says, okay, how many periods were in that year? I'm going to turn around and run it based on those number of periods. 00 doesn't count, so you have 13 periods. You want to make sure you have 13 in there. If you have 12, if you have 14, you want to make sure your company information is that proper number, or it's going to drop those periods from the rollover. Okay. No trigger bypasses the trigger. Okay. Again, we've never run it that way. We don't worry about it in regards to that, but it allows you to bypass the triggers and not use the triggers. Again, the key to this is using the triggers to make sure everything posts nice and clean. Okay. The next one is transaction difference. Let me just move down here. Is transaction difference. All right. That does a check. Will be made to see whether the number of rows inserted into the destination table matches the number of rows that was created in the process. So it's just a check. It's just a safety valve to say, hey, the system created 32 transactions, and there's 32 transactions in the 00 period. Everything's honky-dory, we're good to go, okay? Now, the next two parameters are for people that are using multi-currency, all right? So if you have on your company information screen set up with amount 3 or amount 4 configured, then basically what this does is when it does the rollover and it posts to the 00 period in the next period, it's going to post everything with the new exchange rate based on the previous period, okay? Or based on the 00 period. So if you've updated the exchange rates for that 00 period and you turn those two things on, it's going to update those amounts and repost it based on the amount. It's going to do the currency conversion again based on the 00 period and the rate that's tied to that 00 period. All right. So just be aware, if you do that, basically you're recalculating all of your amount 3s and amount 4s based on a new exchange rate. If they're off, then it's just going to aggregate those amount 3s and amount 4s based on what it was ever posted to the general ledger and move them over. Okay. Again, I would suggest if you want to, you don't turn those on, you let it roll over, and then when you turn around and do your currency reporting, you can use those new rates and do the new rates to do the exchange rates and gains and losses and everything else moving forward. Or roll it over, and in period 1, you're going to recalculate everything using the currency reevaluation process. All right. The last two things are just GL06, which is the report file that comes out, and I'm going to show you that in just a second. Actually, I showed it to you earlier, and then the transaction date. All right. Now, with that, we're almost done here. The profit and loss rollover to retained earnings. Okay. So what it does again is going back through here. It turns around. This is the profit and loss side. So it took everything from the 4s, 5s, 6s, 7s, right, 8s and 9s, and it rolled it over based on the posting attribute values, in this case to the 300, the 900, to the 3100 account, and that's the retained earnings in this example. I know I flipped between 3500 and different accounts, but in this case, this example, the 3110 is the retained earnings. So it posted it by the category, by the branch in this case. So I got my balances from the P&L based on those values, and then it posted it again based on that parameter, going back to that parameter, that 999 parameter, it posted that to the 999 account, okay? Now, one thing I want to show you here is you'll see canceled on the bottom here, okay? If you run the process once with the post on, okay, and normally what we recommend is, hey, on January 3rd or 4th, when you get back into the office after a good New Year's, you turn around and you run your year-end process and roll it over. That will allow you to do all your reporting in January and February and March, okay? Then you turn around and do your year-end and you make your adjusting entries, okay? We then, as soon as that's all done, rerun the year-end process again, okay? Now what happens in that case is the year-end process says, hey, there's already a transaction posted for the year-end process. So in this case, it was 524. Guess what? I need to reverse those values, and I'm going to repost them with the new values. Okay, so you'll see the system do that, and it'll turn around and put cancel on the rows to cancel it, and then it's going to repost it again with the new values. All right, based on the changes you made in the previous year. So the system, the process automatically looks after that for you, okay? So you don't have to worry about, oh, do I need to reverse that or whatever? That's all looked after. So on the balance sheet, again, the same process occurs, okay? So you have your balance sheet where it's going to roll over everything based on the account number, based on the category for that account. It's going to roll all of that over. And if you notice on the bottom again, right here, you have the 999 account. And it's 142, 141, 54. Again, when you come back over here, 142, 150, 144, debit, credit. Guess what? That 999 account is matched out. It equals 0. All right. So again, the year-end process looks after that. Again, if I reran this the balance sheet one, you'll see cancel, 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 and then you'll see the new postings with the new amounts. Okay. Any questions or anything? I see some new posts here. All right.
So the next question is, are you suggesting that any adjusting entry be in the opening period or in the first period in the new year?
I suggest that if you're going to do it, if you're not going to do it in the previous year and clean it up in the previous year and rerun the process, then you have the option of doing it in the 00 and the 01. And if you're going to do it in 01, use a different transaction type. If you do it in 00, just use your GL transaction type. You know, there's no hard or fast rule to it from that perspective. Okay.
Okay.
All right. It all depends on, you know, it's accounting preference is what it is. Okay. So I got one more thing that I want to make people aware of that people don't normally do or are aware of. Okay. There is a process within Unit 4 that's called transfer historical. The process is DA04. It's available on the menu right below as part of the year-end rollover. So if I come up here, year-end routines, transfer to historical. Okay. Now, what that does is when you run this, you put in the year, the periods that you want to transfer to historical. Okay. And there's no hard or fast rule. Right now, I guarantee 95% of the people have all their GL transactions in the GL table, the active GL table. We call it AGL Transact, and they're all in the active table. All right. They don't ever move them to historical. All right. Now, again, the more data you have in the GL table, the longer it takes to do queries. So if it takes, you know, five hours to, or like 30 minutes to run a query for, you know, 2 years, that's because there's a lot of data in there and it takes a long time to run. Okay. Not a good example, but I think you get the drift. So what I suggest is you get into a mode of figuring out how many years of data do I want to retain in my active GL table, and how many should I be running to historical? You know, you could use the accounting, you know, the IRS audit capability. Hey, I'm going to keep 7 years active, but I'm going to move anything greater than 7 years, I'm going to move it to historical. You don't lose the data, so don't worry about, oh, I've got to do something special for it. You know, there's just one little flag that you have to turn on to see it. All right. Another way of doing it is, hey, I need 3 years of active data in my current GL, and I want to move everything else to history. Again, the benefit of it, it makes everything work faster. Your queries will come back faster when you're doing GL queries, analysis, and so on and so forth. Okay. So again, you got to come up with your data retention plan, so to speak. All right. 3 years, 2 years, 4 years, 1 year. You know, we can even do 1 year and move everything to historical. Now, you don't lose that data in balance tables. That's the great thing as well. So you're not going to lose that data if you built balance tables and you're using your balance table reporting, which is a good practice because it aggregates everything when you're doing like a P&L sheet or, you know, a P&L report or whatever. You know, you got the drill down on the balance tables, and we might put a session in the future on that as well, or embed it into the reporting thing online when we do that in the winter here. But the goal here is to, again, make the system work for you more efficiently. So in that case, what we're going to do is you're going to transfer data to historical tables. Now, when you do that, in order to see it, all you have to do in a query, in a balance table GL, general ledger transaction table query, is there's a C-historical GL. And all you got to do is turn that on. And once you turn that on, it's going to then turn around and allow you to bring those transactions into your analysis. So for example, if I was, you know, I need to go back to in our example behind the screen here, if I wanted to go back and look at a transaction in 2018, I could just come into my transaction inquiry screen, click off the historical GL, and then I can see my data in 2018. If I don't click that off, I'm only going to see everything from 2019 to 2025, because just above there, you'll see B, general ledger, and that's only going to show everything for the active general ledger. So again, it's a practice that we highly recommend. Again, we haven't pushed for it, but if you want some help doing that setup or taking a look at it and somebody validate it, reach out to us. We'd love to help you try to do that. But again, we recommend you start looking at, especially when you have 10 or 15 years of data in your general ledger now, moving it to the historical and cleaning it out. Aside from that, this kind of ends our time together. So we're kind of coming up to 11:30, the end. Is there any more questions or answers, or I don't know if Bailey, you want to open something up, or somebody's raised a hand, or?
Nope, I don't see anyone. Feel free to maybe take a minute to let any other questions come out to the top. So you can chat those or question and answer those in the meeting. Other than that, while we're just waiting to see if anyone does have any last minute questions, again, thank you, Danny, for presenting on this today. And we will be back with more webinars in the new year, again, covering the 7.76 release that's just come out. And like we talked about, having a good environment for your data to be processing, and then for being able to have good access to your data in that reporting session in March. So we'll cover those topics in the new year, where you have hopefully a nice clean rollover after today's conversation. Again, if you want any of the resources that Danny's mentioned today on the call, feel free to send me an email and I'll work on getting out to those. And we do have a question now. Year-end balance table. How would you recommend making any changes to the SQL queries?
Great question. Okay, who posed the question? Oh, Tracy again. Okay. I would recommend you, I would recommend you be very careful about making those changes. The first thing, you need to understand how the balance table works, and I would reach out to you could reach out to Servita, you could reach out to Unit 4 to get some help on that. If you're familiar with them, then you can just modify the SQL behind the balance table from that perspective. But again, it's more of a technical. Make sure it's not just something that anybody can do. You should inquire on it. And again, what I would recommend is, if you're going to make a change, reach out to either Unit 4 or Servita and say, hey, we're making this change. Can you just validate this for us from that perspective? Again, the good news about that is you could actually remove values that in that balance table rollover that aren't critical to your next year rollover. So, for example, we did have a client that did have a ticket number on the account rule, on the set as optional on the account rule for the BSP account. And what we did is we worked with them and we set the balance table up so it would ignore ticket number when it was updating the balance table. And when we do the year-end rollover, it's not going to roll it over by ticket number. So that was one of the other ways, besides overriding the trigger, of making sure that we got rid of anything that we really didn't want to roll over. And just to give you an idea, when we rolled over the previous year, there was 10 million transactions because every ticket number was being rolled over to the 0-0 period. And after that, we went down to like 107,000. So again, it's pretty significant difference in regards to how we did that. So again, it can be really help you make that year-end transition much more efficient and much more cleaner. Perfect.
Awesome.
Excellent.
All right. Well, again, if there's any further questions that come up after we've closed off the meeting, feel free to email those over. And like I said, if there's any resources that you're wanting, just let me know and I'll work on getting those out. The recording will go out when the meeting's finished, and I'll work on getting the link so that you guys can rewatch as you attempt your own year-end rollovers. And we hope that you have a happy and healthy holidays and a happy and healthy new year. And we will talk to you guys in 2025. Thank you, everyone.
Thank you, everyone. Have a great day. Merry Christmas. Happy New Year. Enjoy the holidays. Stay safe.